Welcome into the Crypto Bunker podcast. Today we're coming to you live with an emergency broadcast. Obviously, over the past couple of weeks, I've been pretty quiet. Um, I've had a lot going on with March Madness and just other things, and just haven't had time to post. I did try to post a video, I think a week or two ago, about um, switching sort of my stance to bearish on risk assets. Obviously, it didn't work out perfectly the way that I may have thought. Um, in terms of Ethereum, we're looking at a pretty big crash here, um, where I do think you're coming into something here, but the crypto industry is really having some serious issues right now. It's being cut off potentially from the financial system. Um, it's not it's not necessarily being regulated in a productive manner. It's being regulated in more of a um, sort of fighting stance. Like then they fight you. That meme is sort of coming true now, and just looking at this chart, to me, like it sort of could end up being this kind of um bear pennant, just a massive on a massive scale, basically. Um and so if we take it from like the bottom here, well, it doesn't really work, does it? I think on a log scale, this might work. Let's see here. Because crypto is a log type of asset, right? So if you take it from the bottom, yeah. So, I mean, again, we have very strong support down here, in my opinion. This is like worst case scenario. Um, I could see a double bottom. I could see 1,000 being support. Um, you know, but right now it's really looking bad. If you look at, let's see, is this Silvergate? This is Silvergate. This is the one of the only banks that funds crypto, or I guess banks people that are involved in crypto in the US. And there's been accusations that they're involved with a lot of fraudulent activities. And so that's very bad look for the space. And it's sad. And I think that because crypto was on such a national stage, that at this point we're looking at a recovery that will take a long time. But we have to remember the fundamentals of what crypto offers. And at this time, it's good to sort of bring back the premise of Bitcoin specifically, um, because Bitcoin really allows you to be fully self-sovereign. So you can, and obviously the price goes up and down, but the Bitcoins that you hold on your Ledger or Trezor or whatever device definitely don't have anything on exchanges. Um, that allows you to remember a 12-word phrase and write it down or just have it in your head, and you can move to a different country or a different area of the world, and you can um, have your wealth basically stored there, um, which is a lot easier than gold. Like, say you had, one Bitcoin and that's $20,000. Um, but that would be like 10 ounces of gold. Um, which in that case, you could probably argue that you could take the gold with you. But again, that's just one of the fundamentals. Another one is just being your own bank. obviously we see another crypto bank that is crashing pre-market. It's called Signature Bank. And I wouldn't doubt that this thing goes to zero as well, unfortunately. There's a banking crisis that's happening. There's a bank run. We can look at um, Silicon Valley Bank, I believe is what it is. This bank banks a lot of the venture capital industry. And so a lot of VCs, funding different SPACs, different small investments. And so that's kind of where crypto gets caught up in as well, is like this VC sort of, venture capital backed type of environment. So, and you can see that pre-market, we were down 60% yesterday. Let's show this on the daily. We were down 60% yesterday, and now we're down 66% pre-market. So there you go. At the end of the day, though, at the end of the day, I would say that the digital economy is definitely going to happen. And we need to fight for at least a remnant of a decentralized digital economy. If we don't get that, I can tell you for sure that we're going to be in like a dystopian nightmare scenario as a country and as a world. I do believe that FTX was brought in as a Trojan horse into the crypto industry to basically ruin it, basically wreck it. And SBF, obviously associated with the banking, or not the banking, but the it's hard to say. I mean, they're sort of associated with a lot of actors in the political realm, people that are paid by lobbyists who want crypto to go away. He was paying these people. He was in backdoor rooms with Gary Gensler. He was in backdoor rooms with the commodities exchange people. And crypto really is sort of a destabilizer for governments, if you think about it, because you can be fully self-sovereign and you can have your own economy based on this technology, and it really can't be stopped. And so that's why the governments wanted to take it out. And again, we're in the fight you stage, but after the fight you stage comes the winning stage. You vote with your feet, and people will either stay the course or they will sell and leave crypto forever. And that's how you form bottoms in a market like this, is a massive capitulation phase. And we could be facing that now. There are a lot of people calling out, Raoul Pal on Real Vision for being a scammer, like hardcore. This guy, Mark Cohodes, if you look him up, he sort of goes into the fraud of Signature Bank and Silvergate Bank and the fraud of FTX. He actually called it, way ahead of time, and was trying to work with regulators to expose them, just like others were in the space. He's not in the crypto space, but I mean, you have people like Raoul Pal, who, is a respectable guy. And, I looked back on his, the podcast that he's done in the past on crypto, like 2020, 2021. I really fell hard for those. I'll be honest with you guys. And that was a big part of why I was trading crypto. And I'm lucky that I found Keith McCullough of Hedgeye TV, to set me straight so that I was able to sell, most of my stuff up here. But it was scary because I was leveraged, in this area. I leveraged back up around here, and then luckily I did sell around here. But I still have a lot of locked up ETH that's in Kraken, and Kraken is like not even allowing staking anymore. So it's just a crazy environment. I I'm hoping, I think by the time I get that back in like a month when Shanghai goes through for Ethereum, we'll be looking at, a much lower price. And then at that point, it just sucks because it's a good portion of wealth that I can't liquidate. And like I probably would have a couple weeks ago, when I flipped bearish, but I just wasn't able to. And so it's unfortunate. Um, it's hard because I want to be a long-term, participant. And actually I've been dollar cost averaging into Bitcoin, and I will continue to do so on Cash App. So I'm just doing like $11 a day into Cash App Bitcoin, and I'm just going to do that basically indefinitely. I do think that there is a value to be had to have a digital asset that is in your own possession. And that's basically the thesis, and it really doesn't have to be more difficult than that. This is the total market cap of crypto. And as you can see, we're pretty close to even making a lower low. In the past, I have tried to see where have my targets been, because I need to like redraw them. But yeah, we basically caught support here at the previous all-time high. If we break that, we're going to go pretty far down, and this is where like that 400 ETH comes into play. It's basically the same chart, as ETH, essentially, with like a little bit of leverage with those other altcoins. But yeah, so if you're gonna sell, you and just leave the space, you probably want to do it now. I do think that we're in a capitulatory phase, and unfortunately, that is going to lead to much lower prices. With Bitcoin, we're looking at, we're probably looking at 12K. That's kind of been a region to look for, 11.5, 12, around that region, especially if we get like a stock market sell off, guys. This is just like a VC sort of, Silicon Valley Bank, Signature Bank, Silvergate Bank type sell off, which is huge, which is massive. So that's already massive. But if we have like a banking crisis, and that's how it started, God forbid that these people actually come out and try to blame Silvergate Bank and Silicon Valley Bank and Signature Bank and say that they were all tied to crypto, and that, like maybe that's part of the even bigger plan, right? We had the SPF as like the initial plan, and now this failure is like the secondary plan, where they come in and they're actually going to try to blame the like a banking crisis and a crash in the stock market, and they're on crypto, and they're going to literally just ban crypto and not let anyone buy it or sell it. That's the issue that you're having when banks are now involved, is that, banks like PNC or Citizens Bank or JP Morgan or whatever, are they going to continue to allow people to buy crypto or even sell crypto? So you have to be careful to, with your liquidity. If you feel like, again, you have to be pretty hardcore now. You're either going to be in the crypto ecosystem with potentially no way to go to a stable coin and potentially no way to cash out. You'll probably have a stable coin. Okay, I'm not going to say that, but you'll have USDC DAI, essentially. But So you could, go to a ledger, cash out on USDC, DAI, save a little bit of ETH. If that's the way you want to do it and you want to hold that for a while, I don't know if that's necessarily the best strategy. I would say at this point, you either sell and get out and go to the banking system and then get your money out of that somehow into gold maybe. And then, or you just send it to a ledger and you're in it for the long haul here. And remember, this is a dot-com bubble, and people that have tried to say, even me, right? Like I've been bullish at times, and that has been a mistake to ever really flip bullish at all. Sometimes just gets so negative in the world that you feel like you have to be positive, and to do that, you have to watch videos that are telling you that it's bullish, right? So, and that makes you excited for the future. But again, we have to be real. This is a dot-com bust. If we look at this compared to, like, say, like if you just compare it to equities like NASDAQ or something, or let's just say Microsoft. Look what the people had to go through in Microsoft, right? We had this massive blow off top bubble, and then it went sideways for 14 years. Okay. I'm not saying that's what's going to happen, but I'm also saying that could happen. And people will literally give up. People will sell the bottom. People will, it will be insane, basically. And that's essentially what we're looking at. And let's see if we can just look at some equity stuff. My targets at this point are sort of consolidated. Let's see if this is like a better. So we've obviously broken through, but now we're on this support, I guess. So you could say, like, okay, this is like a key time. We're at least going to retest the lows. I mean, let's just be honest. But I mean, in my opinion, we're probably looking at something down in this region, 3,200, 3,240, 3,250, like in that region. That's what I expect for the S&P. For the NASDAQ, it's a little bit different. It's going to be much more volatile. This is probably a good point to look for around 230, something like that for the first leg. But I mean, yeah, so I mean, I think that makes sense. Tech is going to sell off because of this Silicon Valley thing. So just be careful out there. Obviously, gold and silver are money. So people, they'll probably get caught up in this type of thing. But to me, this is just a massive bull flag. And again, we could come to the bottom of the bull flag and freak everyone out. It's possible, because liquidity events, you can get, this can get swept. What I would say, if you have a banking crisis, usually people will run to gold as a hedge because it won't go down as much and it will recover faster. So silver will get sold off more. It doesn't look great, but it is on some key support here. I apologize for all the lines and everything, but yeah, if we're looking at like one of the best silver miners to buy, or gold miners, Wheaton Precious Metals, this is a key support line for sure. And hopefully we can hold here. If we can't, we might retest the lows, but that's okay. We're gonna be fine. So again, have your hedges on. have looked at rates. I think that rates have topped. This is a classic. You roll along this, and then you have a steepening trend line, and then you break through, and then you retest that line, and then you sell hard. And so you can see on a weekly time frame that we put in a doji here. And I would say that buying bonds is a good idea here. You can see the TLT as well had a nice sweep. It looks very similar in terms of like if you take that like sort of trend line there, I guess, and you sort of draw that out. It's kind of the opposite, right? Of the we had obviously that's what bonds are. They're the opposite of rates. So if we look at it on that inverted scale, we can see that it's very similar to what I just showed you on the 10-year yield. We have, roll, steep, breakthrough, test, and then back down. So I do expect a nice rally in bonds. Maybe, they get caught up in this liquidity event type thing here, but we will see if that's the case. Here's another ETF to look at as well, IEF. And the Vanguard ones obviously are there as well. But if we look at the dollar, this is inverted. So it's a yeah, it's a pretty crazy looking chart. If we just have, let's see if this is kind of similar, but it's not really. It just kind of like went hard there. Maybe that's like where we caught support there. I don't see it going above 115 like it did. I definitely could see it go up to like 109 in like a sort of pattern that we're looking at there. But at this point, we'll see. I mean, it could just kind of just dent, and then break through or something like that. I don't know. But we should probably retest these levels at around 90, and that would be good for gold and silver as well. Rates down, dollar down, stocks down. That's like what I've been waiting for. Rates down, stocks down. And people, again, we're not positioned for that, but that's what history has told us, that when rates crash, stocks crash and bonds will recover faster. Gold will recover faster from a liquidity event in that scenario. So hopefully you guys got something out of the video. If you did, please like, subscribe, and have a great rest of your day and have a great weekend.